The stock of Facebook's parent company Meta dropped in the last few months by 50%, and with this, about $500 billion market cap have been erased. Mark Zuckerberg's share in Meta fell more than $67 billion. Is this drastic price correction of Facebook stock justified, and what are the reasons for it? Isn't it worthwhile to invest right now, or are there even bigger problems that could send the stock price downwards even further? You have to take a very close look to understand the situation, but I can already reveal that I believe that the business potentials are quite high. The reasons for the current setback don't have anything to do with Facebook's recently released full year 2021 results that once more had been outstanding. Facebook is currently confronted with a lot of areas of concern, like for example the increasing competition from platforms like TikTok. But the fear of the markets is in my opinion mainly based on 4 items. Number 1. Less revenue due to Apple. Facebook's revenues do nearly entirely come from advertisements. Apple's new privacy presets have a major influence on the tracking of the user's behavior and negatively affect Facebook's revenues by about minus $10 billion. Number 2. The growth of Facebook's customers is becoming slower. Over the different apps and services, there are more than 3 billion daily active users. Well, there are only 8 billion people living on this planet, so there's a natural point where it is becoming more and more difficult to increase the number of customers. Number 3. Facebook expects high investments of about $29 to $34 billion for infrastructure and additional employees for this year. This is going to increase the costs from $71 billion at the moment to about $90 to $95 billion in total, and would reduce the free cash flow for the coming year tremendously. Number 4. The risk of a divestiture. Facebook's increasing power is a thorn in politicians' flesh all around the world. The US Federal Trade Commission filed another antitrust suit against Facebook after the last suit had been dismissed last year. But a suit could take several years with uncertain closure, and circumstantiating the claims will certainly be difficult. By the way, it is the same FTC that approved Facebook's acquisition of WhatsApp and Instagram just a few years ago. The challenges that Facebook is confronted with are certainly huge, but now we have a look at Facebook's arsenal, and that is a blast. Facebook's growth in the past decade has been nothing but spectacular. The revenues increased in the past 10 years by 41% per year on average, from about $4 billion in 2011 to $118 billion in 2021. The earnings increased in the same time by 44% per year, and the free cash flow, which is of course much more important for us value investors, increased on average by 40% annually, from about $1.5 billion to nearly $44 billion last year. Facebook became a real cash machine. During the 8 minutes that you watch this video, Facebook's operating business generates more than $650,000 in free cash flow for its stockholders. Every 8 minutes, day and night. Why is Facebook able to grow so strongly? Facebook's apps and services certainly are a bit addictive, and they gained a lot of relevance, especially for smaller businesses. But apart from that, Facebook just doesn't need much capital for its growth. Last year, Facebook achieved a cash return on their invested capital, so a CROIC of 30%. That means they were able to generate 30 cents on every dollar of invested capital. That is an incredibly high rate. In other industries, it is usually more in the middle or lower single-digit area. What is Facebook doing with all of that money? One part flows into projects of potential future growth that are not directly linked to the operating business. For example, Facebook regularly purchased other companies and their technologies. The most well-known examples for this are the acquisitions of Instagram, WhatsApp, and Oculus VR. When you just look at the past 3 years, Facebook acquired 19 different companies. The remaining cash mainly went into 2 channels. On the one hand, Facebook bought back $45 billion of its own stocks, which increased the share of the remaining stocks in the company Facebook and improved its value accordingly. On the other hand, Facebook has a spotless balance sheet. They would be able to pay back all of their debt of $41 billion just by the current assets and would still have current assets of $25 billion left. Even with calculating the shareholders' equity very carefully, I still see a value of more than $87 billion. By my calculation, Facebook could immediately finance company acquisitions of $40 billion only with the liquid assets, which is, by the way, much more than they paid for WhatsApp, Instagram and Oculus VR combined. This just provides a lot of room for maneuver on further growth. Where will the future growth come from? The biggest and boldest plan is certainly to build up the metaverse, a virtual reality that is of course going to be entirely controlled by Facebook. Of the previously mentioned 19 acquisitions of the past years, 9 companies are dedicated to support the areas Reality Labs and Oculus Studio. Apart from the metaverse, Facebook also invests massively in gaming. As a standalone business, it is already very important, but in combination with the metaverse, this may have an even bigger business impact. The third item is, in my opinion, entirely underestimated by the markets and will probably be the most important driver of growth in the midterm: the increase of the revenues through the existing customer bases. The revenues per customer differ by region heavily. Europe has a similar economic strength as North America. If the European revenues could be increased to the level of the US, and if the rest of the world, including Asia Pacific, could be increased to just 1/4 of the US revenue, only this would provide an additional growth potential of $163 billion, which would be more than double of Meta's current revenues of $118 billion. On top, there is still the continuing growth of the customer bases and the not yet maxed out potential in the US. What does it mean for Facebook's value? What is the valuation of Meta stock on the current price level? As the markets are currently quite unsure on Meta's valuation, let's try to approach the value with 2 different scenarios. The first one is a pessimistic scenario. We assume a drastic correction of the growth rate in the next 2 years and consider afterwards a slower growth. The tool calculates the discounted free cash flow for the next 15 years. When we include the liquidation value / shareholders' equity of $87 billion that we calculated earlier in the video, we receive a total value for the entire company Meta of $754 billion. When you divide this by the amount of 2.7 billion outstanding stocks, we receive an inner value of $277 per stock. With a current price of $190 per stock, we have a margin of safety of 31% in the pessimistic scenario. The second scenario is the more optimistic one. We also assume a drop of the growth rate in 2022 to 10%, which is in the upper range of Facebook's own forecast. But we're a bit more optimistic for the next years than in scenario 1 and assume that Facebook gets its problems under control. Even if it is the optimistic scenario, we are careful and do not consider an overly optimistic growth for the metaverse. When we put in the 2021 free cash flow and the liquidation value, the sheet calculates a value for the company Meta of $1,200 billion, which translates into $441 per stock. When we look again at the current stock price of $190, we have a margin of safety of 57%. Personally, I believe that the metaverse is an enormous chance for growth, but I don't think that it is the only way of future success for Facebook. Mark Zuckerberg and his team have always been great with seeing new developments, jumping on them and introducing them super quickly. Facebook will approach new developments offside of the metaverse if they fit to the company and provide sufficient business potential. And think about one thing: 3.5 billion customers do not just simply go away. Especially not when their lives are that strongly connected to Facebook's products. The analysis of another strong company with a lot of business potential you can watch if you click here right now. Leave a thumbs up and a subscription if you liked the video, and please read the disclaimer. I'm not a professional investment advisor. See you in the next video.